So the 400 is coming up, and it's coming up towards these major lines of support, right? We saw a series of supports here at 1077. Again, we shot up, tested the top of that trend line, came back down, and we tested it before shooting up again. You can see the same thing happen here at 109.3. That's why these CPR lines are so impressive. It is a measure of volatility and showing specifically a contraction where volatility is set to expand, meaning big moves. And if you time it right with the right direction, big money. You don't even have to put that much money down because these moves are big. It requires more patience than it requires capital, which is a mental and emotional resource, not a financial resource. Check out my recent movie, my recent episode, show, video, whatever, on Simon Sinek, The Infinite Game Theory for Traders. Duties! What's good? So we're just jamming out here today. Finally getting a little warm day out here in the CO 303, and I'm loving that. So yeah, my job doesn't require shirts. My job doesn't require me to cut my hair. My job doesn't require me to hide tattoos. So let's let it all hang out. You know what I mean? You know what I mean? All right. So we're going to look at the DXY today, the Dixie, the dollar index, this thing that everyone is talking about. And we're going to give you some basic analysis on it, some actionable things in which levels to watch, right? Levels to watch. And I'm going to keep it quick, simple, and clear. Here we go. Akido. Let's go to 1 week. Starting out here on the 1 week time frame. Ooh, he's freaking crazy bullish, right? Crazy bullish. Now, I am on capital.com because it does show me my vector candles, and I'm a vector schnob. Plus, I got my vector zones. So you can see what's really interesting about the 1 week. Let's try the 5 day. Wow. 1 day? All right. Yep. 2 day? Jeez, that's crazy. So though this looks like a radical straight up type of event here, it's not unprecedented for the DXY to hold its gains. If you look back here in 2015, I mean, it rode this sucker up and then it held. It consolidated for quite a while. And it really only broke these levels twice. To the downside, twice to the upside before making this move here some 7 years later. Now, yes, everybody likes trend, channels, patterns. Now, I don't like patterns as much, but I do like patterns that delegate trends. So I will show you this parallel channel. Now, if you look back, this parallel channel from 2007 has been reliable. I mean, if you're a scalper day trader, obviously this doesn't have any effect on you. But if you care about your investments, if you are a day trader or a swing trader, then you're going to want to pay attention here. We have gotten tremendous support off of this bottom line. And yes, sometimes we create our W formation, our base structure below this line, but that is okay because it still plays into relevance. Same thing here. We rarely pop up above and hold above. You can see the same thing most recently. We did not hold above. Now I want to go into where we think the pullback is coming, because the pullback is coming. Look on the weekly time frame. We have 1 hit, 2 hits, 3 hits of bearish divergence. That's regular bearish divergence and a little M formation right there too. Look at that little beautiful little M formation. But more importantly, 3 hits of divergence. Okay. Now we've also got the weekly RSI on the TDI crossing through the liquid 50. The liquid 50 is a true measure of trend. And if you see a cross of that, it means big things, right? And this is a pretty deep cross. We haven't seen a cross like this since May 2020, and we had a nice pullback of 15%. 15%. So a 15% pullback off the current highs. Wow. Look at that. 15% brings us to the bottom of the trend line regression. That parallel channel bottom regression line, 15%. Now I'm not expecting that, but I'm just telling you we got a cross. We're looking for a pullback. I'm not talking about a correction. I'm not talking about a decade-long high. This is what I'm talking about. I'm not a macroeconomist everybody's trying to be right now, and I'm learning more about it than I ever have, and I'm grateful for that. But at the same time, I'm not going to try to tell you what the Fed's about to do, because they don't make any sense. They don't even know what they're about to do. Anyways, all right, we're pulling it back in here. Let's come down to the 1-day time frame. I believe that we are about to see, based on this CPR print, I called this September 14th CPR print as a definite place to see a bounce. Guess what? We got that bounce. We poked our head above that channel again, got rejected. You see this a little closer, got rejected. And I think we definitely are coming down to grab some of this liquidity. That is what we do. You can see the vector candle where an extreme change of volume occurred, multiple ticks of the chart up, down, and unfinished auction was left in place, meaning the charts moved so quickly and so frequently that there was actually an unfinished auction. Therefore, there is liquidity remaining. So that's just the top of this box, not including the wick. If you include the wick, we're coming down to 107. So let me make this clear. All right, we're going to ignore these upper lines. I want to leave them because that's what I'm about. But I promise you, we will see a 107.7 to 108 DXY very soon. Now we've got some support on the way down here, so we might stop around 108.5. But the reason I think we're coming down to 104.7 is because of the CPR print. That has congruence with the 200 EMA on the daily time frame, and on the Fibonacci retracement from this most recent move. We have confluence with the 0.382. So the knot 382 is at about 105. And I, again, believe we will definitely see that retracement happen. A strong base build here off the 200. Let's take it to the 4-hour. Now, here's what's interesting is because I think that's what we'll see. I don't know when. So what's more actionable in the meantime is a path that I've drawn out. So here we go. I'm going to draw the path. Just like we came up here, tested, rejected, support, powered up, printed a candle right here. Printed a CPR pivot line here, tested it, shot up, came back down, tested the top of that recent high. Boom, created an M formation. And then again, we're back down testing this line once again. Power up. I think rejection. If we don't get rejection, then we're coming up here and I'm expecting rejection here. I'm expecting a greater multi-session, multi-week M formation before we go on to all-time highs. I'm expecting rejection, retrace, base, building, then move to all-time highs. It's just what I'm expecting, right? But I can't cling to that. I have to erase all that when I enter the market to trade. I just take what the market's giving me. So I expect rejection here, and I expect us to break this, maybe hang out here for a second, maybe clean break quickly, then support. And guess what? We're going to have the 800 EMA on the 4-hour time frame coming right up here. And you better believe we'll see some sideways choppity chop before deciding which way to go. And again, I don't know if we're going to hit that 104.7 for sure in this year or in 2023 even, but we're coming back for it. we're coming back for it, and likely in 2023. I'll make an update video if I see something that's telling me we're coming back for it. So this is where you have to choose. And personally, my bias is laid to the upside, but the charts haven't told me yet, right? The charts haven't told me yet. It's just the macroeconomic conditions. It's just how radical the DXY is. It's just how we got to make another hit at the high, near the high, at the high, before we can be rejected, and everyone can say, okay, the dollar's coming down on a macro trend, risk assets on. All right, hope y'all enjoyed that. Hope y'all enjoyed that. Later, doody doos. Jabronis. Eat some celery.